Hey there, Christian Walsh, real estate agent with Wire Associates. And you know what I always say in my videos? I always say we can't give tax or legal advice. So I bring in the experts to talk about those things. So usually we have eviction attorneys on. We've been doing a lot with those, but I'm so excited. We have a special guest today to talk about taxes. So I'm going to bring on Greg Taylor with Taylor Tax Strategy. Here's a little round of
Oh,
applause. How welcome do you feel now, Greg? Isn't that great? Isn't that great? I always forget to use my soundboard, and now I've got to remember. So, Greg, we're so excited to have you on here. You're a nerd like me. No offense, but you love talking about numbers and running scenarios and figuring out ways to basically do deals and make deals happen and save money for people and things like that. So I'm very excited to have you here today to talk about that. But first, well, and the other thing I'm excited about is the fact that you're doing this so late
mhm.
at night. So Greg is in Kentucky, right?
Right.
But he helps people all across the nation. There's only two states he still has left. He's got to get somebody in Hawaii and Alaska, but he is working on those. So Greg is here from Kentucky. It's 3 hour time difference, and it's close to tax season too, right?
It is close to tax season. Yeah. So March
So you're a busy
17th
dude.
is the deadline. Yeah.
You're a busy dude, so I appreciate you coming out. So first
Absolutely.
things first, tell me because I visited your website. Michelle actually found you. Michelle's in the background making sure everything works, keeping things clean in the comments. Thanks for being here, Michelle. So Michelle found you guys. She found you guys through social media. You guys have done some amazing stuff online. And then we visited your website, and I loved your website because you talk about working with real estate investors, which is who we work with, and then blue collar business owners as well, which in many respects, a real estate agent is very similar to a solopreneur like that. So
That's right.
that's why I'm excited to talk to you. So tell me, Greg, how did you get your start into this niche for tax strategy?
Yeah. So I've the two different niches, right? Because I do real estate investing as well. So my start with tax strategy actually came. I was doing some real estate investing. I was working in sales type jobs and working on my MBA, and was approached to do the bookkeeping for my church actually, and they asked me to do the books, and so I started doing the books for my church, and then was able to find another job while working on the MBA and started doing books for them. And while working with that company, I was able to get some other clients from the CPA that I was working with. And he just started sending more clients to me. And so the bookkeeping was born from that. And then after that, moved into tax preparation. And about 10 years ago, really started focusing on tax strategy.
So the bookkeeping side where you started. So the problem is you were doing a good job. That's why the CPA kept sending you more business. If you do a good job, you're going to get stuck doing more of it. So I'm glad you branched out for that. From that, so the real estate investing side. So you let the cat out of the bag that your mom is actually a real estate agent and is still a practicing real estate agent. Tell,
Correct.
tell me more about that.
Yeah, so she started doing real estate when I was about one, and has been doing it ever since. My whole family has always owned rental properties, except for one uncle has not, and everybody else in the family on both my parents' sides, my mom and dad, grandparents, everybody has owned rental property at some point
There
in their
has to be
life. And
one.
so
There's always one in the family that's the black sheep for something. So not owning real estate, that's that uncle.
that's
So
right.
you grew up around this. You grew up around investment properties, and your mom helping investors and home buyers. You bought a home at a young age, or actually, did you buy a rental property at a young age? Which was that?
Yeah, so I bought my first home when I was in college and rented out the rooms to my friends.
That's
So
awesome. And did you live in one? So was it like a house hack scenario?
correct, house hack. Before people were doing it, really, I just was wanted to have a place for me and my friends to live, and so that's how it worked.
That's awesome. And then what happened to that house? Where is that house now? I mean,
So
not like you burnt it down. I mean, like,
sure. Well, it was tempting. So for 15 years, it was rented to college guys back to back.
yeah,
In 15 years, I had 1 month that it was not rented out, and so after the last guys moved out, I toured a family through it, and I called my wife right after the tour and said, "We cannot rent this again."
It was, I can imagine college young men, it probably was not
That's right.
ready for a family.
Right. So we ended up flipping it at that point. After 15 years, we repaired everything and then ended up selling it. So
Did you do a 1031?
I didn't. I didn't really need to at that point. Since I'm a tax strategist, I normally am able to make sure that my taxes don't need a 1031. So I kind of take care of stuff throughout the year and haven't really had to do a lot of 1031s. The thing about a 1031, it's great, but it also carries that depreciation forward. And so you may have to recapture it eventually. So if you can absorb the profit in a year with other strategies, that can sometimes be a better choice.
No, I love that. And you and I, we of course I have prep call with Greg, and we didn't even talk about any of this, so we're going off of our so-called script. But this excites me to talk about the 1031 exchange because I agree with you. There's certain cases where you don't need to do one, especially if the gain is a very small amount. It's just not
Mhm.
worth it. There's a dollar amount where a 1031 exchange is worth it. Now, out here in California, as you know, because you have California clients,
Mhm.
sometimes you have crazy amounts of appreciation and there's nothing you can do other than a 1031. But if it's a small gap, it's really in many cases not worth the extra trouble because of the strict deadlines. And then California, as you know as well, they're going to track when you do a 1031 exchange. If you take that money out of state and do a 1031 exchange to another state, you have a form to fill out. And if you ever ultimately liquidate the asset, California is going to get their piece of it. So it's gotta love California. They're always going to find
Oh
a
yeah.
way. So, no, I'm excited to have you here. And as a reminder, folks, make sure you put your questions below. We'll get to those as those start coming in. But there is an interesting loophole that I wanted to chat with you about, Greg, that you made me aware of. And that's the short term rental loophole based on basically involved in how long you rent out a property and then how much work you put into the property. So can you dive into that a little bit? Because that was cool.
Sure. So one of the things that happens for a lot of people is they'll get into short-term rentals and then they have a loss that's really big, or they get it even if long-term rentals, but the loss is really really large, and the federal government limits that loss to $25,000 per year if you are not a real estate professional.
Can we talk about that loss for a second? So that would be basically any of your expenses plus depreciation, correct? That factors into the loss.
That's right.
What other things would add into there? Because you may not actually lose money. You may actually have cash flow, but you still have loss, correct? Am I right on
Correct,
that?
correct. The biggest one that's going to be with the cash flow versus the regular loss is going to be the depreciation.
Okay.
Other than that, the losses are kind of going to be from cash expenses like interest that you paid, repairs, taxes that you paid, insurance, things of that nature. So the biggest one that's going to give you that paper loss is depreciation.
Okay.
But when we
Sorry, I
jump into
interrupted.
cost
No, go ahead.
segregations, sorry, what
So, so let's say you got that big loss on paper. What can you do to shield it?
Yeah, so 25,000 can be used in a regular year if it's passive and you have W-2 or other types of income. If you're a real estate professional, it can be whatever it is because you're already in real estate. However, if you are not a real estate professional, you have that limit. So the short-term rental loophole allows you, if any property is rented for 7 days or less on average, so you could still have a longer rent, but on average you're at 7 days or less, then you are not hit with the limitation on your loss if you spend at least 100 hours per year working on that property. So
And
you need to jump.
to clarify, sorry, to clarify, that's 7 days. You don't mean 7 days from the whole year. You mean the terms of the tenancies. So you basically are primarily renting it out for 7 days or fewer to renters, and you could have the entire year leased up, but it's just in those smaller chunks, correct?
Correct. And it could be that you have a 12-day rental and then a 2-day rental. And
Ah,
your average is 7 there
got it.
between those two. So it's not that no one can go over the 7. It's just that your average per year needs to be 7 days
Got
or
it.
less.
So you can shield more. You were going into talking about if you can show 100 hours of work.
Correct. So it's 100 hours of work that you need to spend, and you need to be the one that's spending the most amount of time. So you're spending more time than any other one person on the work that you're doing. And so, one thing that some of my clients will do is they'll hire a property management company, not
Mm-hmm.
an individual, because if you hire an individual, they may spend more time than you on that property, which would then disqualify the short term rental loophole.
That's
So,
interesting. I like that. Yeah. Be careful. Make sure they have a few employees at the property
exactly. Yeah,
manager.
you want like a
Yeah.
maintenance guy that's separate or gal, a cleaning person that's separate,
Love
maybe
it.
somebody to meet the tenant or the people at the property that's separate so that you have separate people and nobody's spending more time than you. But if you do the 100 hours per year and no one else is spending more time than you, then you're not typically going to be subject to that $25,000 loss limitation.
And to clarify too, so let's say you have 2 or 3 properties. It's not 100 hours on each one. It's just 100 hours total, correct?
Correct, correct. And that's as a business. So again, this only matters for non-real estate professionals. So
Yeah.
you're a real estate professional, so you don't have to qualify for short-term rental loophole because you're already getting that benefit. But someone who is not a real estate professional, this would help them.
No, I love that because there's a lot of and real estate investors who don't want to have their real estate license, don't want to deal with some of the fun that I deal with, and
Right.
just focus on their properties. So this is a great loophole. And so being able to have a higher level than that 25,000, what can you do with that additional loss?
Right. So that can be used to offset if you have a W 2 or you have another Schedule C type business where you're making income, a sole proprietor type business or something, then it can offset that income. Because
Love it.
we're basically, instead of saying that this is a passive rental property, we're saying this is an active Airbnb business that you run. And so that moves it over to the short term rental and puts it on a Schedule C instead of Schedule E.
Yeah, and I mean, this is getting me excited because I'm thinking things like it's not like you have to be there sweeping floors necessarily for
Correct.
those 2 hours. Like you could be online dealing with admin, pricing it out, maybe dealing reservations, et cetera. So it's not like it has to be hard labor for those 2 hours. So that's great.
Right. Yeah. You could be just meeting with, or like just messaging with people who are going to maybe book the place. So,
I love that. So that is a prime example of your business started out as bookkeeping, then went into taxes, and then went into tax strategy. So what you're talking about right here is a prime example of a tax strategy. You don't
correct.
wait until when are you supposed to file? What, April 15th? Like you don't wait till the 14th and show up and talk to Greg and
Right.
say, "Hey, Greg, what should I have done?" This is why you talk to somebody like Greg and his strategies to figure out what you need to do going forward. And what's great about this, like this is just a small example of a strategy that would be relatively easy for people to implement. And maybe they're already doing it, and quite frankly, haven't been getting the
Yeah.
the shielding that they expected. So another cool one, somewhat similar to this, that you showed me was the Augusta Rule. And it's
Mhm.
based off of, I mean, you'll clarify, you're the expert, but basically it was related to a golf tournament and neighbors wanting to rent out their home for the golf tournament. You take over. You're the expert
Right.
on it.
So Augusta National there in Georgia, the tournament that happens there every year, is what it's named after. And the idea is that you can rent out your home up to 14 days per calendar year, and that is tax free. So you don't have to tell the IRS about that income. You don't have to claim that income or anything. And so the really big benefit is for business owners because if you are doing things that you would use a space maybe for a conference or a holiday party for your office or something like that, you can rent out your own home to your business, and then your business is going to deduct that rent as lowering their profit, and so lowering their taxable income, and then you're going to get that income into your personal account without even having to acknowledge it to the IRS on your tax return.
And what would be a reasonable rent that I mean, obviously it's going to vary, but what would be a reasonable daily rent?
Sure. So it's based on what you're using it for. So if you were using it for some kind of holiday party and it was, your kitchen area, your dining area, your family room area kind of thing, you would use maybe what a comparable nice restaurant would charge for a party room or something like that.
Yeah. For me, that gets the wheels turning because I could be, although it's more complicated, but I could like be shooting videos in my house and like it's there's lots of layers. When I
That's
heard
right.
about this,
Studio
I'm like,
time is the best.
yeah, I missed out. I should have heard about this rule before. I hadn't met you, darn it. So, and again, this is an example of strategy that not enough people take advantage of. And tell me, a lot of people in your position, they say they're very busy this time of year. Explain to me what that means. Like, what is your average day like right now? And what could somebody do to not be an annoying client?
Sure. Thank you. Thank you for asking that. So, um, for me, at this point, I'm really grateful for my team. So we are at February 27th. This time last year, I had done probably a couple hundred returns, maybe. And this year, I've done two because I have
200 or two?
two. Yeah.
What?
I
What?
have a really great team. Everybody focuses on the area that they are in, and so my team does the tax preparation. So I'm doing strategy meetings with my team. I'm meeting with my team to help them through the harder returns, the harder strategies that we're implementing. Those more difficult forms that need to be filled out to implement the strategy or whatever. So today I had 6 strategy calls. So.
That's great. That's great. And then to be a good client for tailored tax strategy, what should we be doing? Like I'm assuming not just bring a big old box filled with receipts. Like what makes it easier for you guys?
Yeah, so one of the most important things is that you have your books in order and you have your expenses categorized so that we can see what those are. So, with all of our clients, we meet with them every month and we talk about their numbers from the previous month. We talk about their projections for the rest of the year. So, then we're able to plan strategy wise what they would need to have. So, what strategies they would need to implement in order to make sure they're saving.
And this also, I want you to know, Greg, this dovetails into what the attorneys, the eviction attorneys, we often talk about, and that is treating a rental property like a business from the
Mhm.
very beginning. And it's obviously important for tax strategy, but it's also important on the property management side. You've got to have a ledger. You have to be tracking the income coming in. And with that ledger, if you have any issues with a renter not paying rent and you sit down with an eviction attorney, you have what you need there to go ahead and actually move forward with an eviction. So at the same time they're doing that, they need to be working with someone like you to take the expenses and the income and figure out a strategy together. So I love that. I love the fact that in doing the right thing with you, it's actually going to be more than just about saving money due to taxes. It's going to be about running it as a business. So that's the point of this call as well, is to talk about being a real estate investor. So and the people that are going to watch this, we've got some people who may own literally hundreds of doors. I've got clients like that. One woman owns about 150 doors, manages it herself. I hope she has a good CPA, but I'm definitely going to connect her with you guys because she definitely could use your help. And then there's others that don't have that many doors, just a couple. And then there's others that are looking to start a real estate portfolio. So let's talk about that from a tax strategy standpoint. Any advice for somebody who's looking to acquire their first property? What would you tell them?
So when I was looking for my first property, I thought that I had to save 20%
Hmm.
uh, to get started. So my first rental property, my first three actually, I saved 20% on each one and then bought one at a time. There are lots of creative financing ways out there. There are lots of private money lenders out there who want to make some money off of their cash that they have sitting. And so you probably have access to your down payment from somebody in your circle that could get you that down payment to get started in rental property.
And another good example there as well is seller financing. That's how I bought my home, is having the seller carry back financing. And let's talk about a primary residence. So this is going to be controversial because I'm a real estate agent and I'm supposed to tell you it's always a perfect time to sell, and at the same time it's a perfect time to buy. We're supposed to say that exact same thing. And we're supposed to tell you that renting is a terrible idea and that you should only buy a home no matter what. But you know what? There's no absolutes in real estate other than follow the law. But so circling back, primary residence versus rental property. What are your thoughts? Is a primary residence an asset or a liability?
So I would put primary residence in the liability category. My definition is very simple between asset and liability. An asset either increases your net worth or it brings in money to you on a regular basis. And your house that you live in doesn't do either of those when you add it all up, because you have utilities, you have taxes, you have insurance, you have the mortgage payment, the interest, if you have that, you have repairs and maintenance. And yes, it might be going up in value, but it's got to keep up with all of those things.
And all those things you just listed for a rental property, how are those treated?
They're all deductions, so they're going to save you money
Yeah.
on your taxes.
Yeah. So in addition to throwing off income, a rental property also is going to help you. It's going to shield income as well. And that's going back to a primary residence in California, the SALT, the state and local taxes, because those are capped, we often, out here, those numbers can be very high and we don't get to take the full advantage of writing those off for primary residence, but we
Right.
would for a investment property, correct? That wouldn't be
Correct.
capped there.
Yeah.
No, see, that's good to know. And I think that's shame on my industry for always pushing to, hey, you got to buy a house, buy a house. I think in many cases, particularly in a high cost of living area, it makes more sense to rent, because owning, your payment's going to be 3 or 4 times higher. And then take the money that you're making and be strategic with it, invest it in real estate that's going to give you a return, or put it in the stock market. I digress, but I was just having a discussion with another agent in the office today. He wanted my opinion on this. So he's in Southern California, which is a low appreciation market. I'm sorry, high appreciation market, low cash flow. So he was thinking, well, and he's 36 years old. He's wondering whether he should buy an investment property here in a high appreciation, low cash flow market, or should he buy in Ohio, small town Ohio, where I'm from, and you have family. Should he buy there? It's a high cash flow, low appreciation market. So my advice to him, for what it was worth, and I'd like your opinion, he's 36 years old. I said, hey, buy here in the high appreciation market. And when in 20, 30 years, you do a 1031 exchange and you can exchange to a higher cash flow market. And then the last piece of advice I told him, I said, look, you're a real estate broker and you're going to buy rental property. It makes a lot of sense, but that's zero diversification. So if the entire real estate market takes a dump, you're in trouble. But anyway, any thoughts on that whole monologue?
Yeah, so one of the things we do with all of our clients is we kind of ask them what their long-term goals are, right? And where they are financially currently. So if you need more cash flow right now in your life, if $500, $700 a month is going to change your life one way or the other, then you need to look for those cash flows wherever they are. And if you could absorb a couple $100 loss even every month for a way greater tax benefit. For example, I have a client who pays about $500 a month for a non-cash flowing property, and she buys one every year in a good appreciation market. And she also saves 20 to 50,000 on her taxes each year from that property. So she doesn't need the cash flow. She needs to build wealth and keep the money she has. So I try to ask my clients kind of where they are life stage wise and what they really need, and then we look at what is most important there. So
I love it. It's so refreshing to talk to somebody who's a tax strategist who understands real estate. I always tell my clients before they sell a primary residence or an investment property, do after we're done with our discussion, here's the questions you're going to take to your CPA, your tax planner. And unfortunately, I lose a lot of clients after giving them that advice because they go to a tax planner who doesn't understand real estate. So this
right,
is very refreshing. And I got to tell you how much I appreciate your approach. You're not trying to shape people to do something that because you're not comfortable with what they're doing because you don't have experience. Like you get the whole picture, so you can
right.
tell them what to do, whether it's real estate or some other asset type. So I love this. So a client of mine had a good question. It's a little bit of a complicated question, but we'll run through it. So he owns a duplex and it's been an investment property for a while. He moved into one side of it. So now, and he's been there for a while. I want to say at least 5 years now. So it's a half primary residence, half investment property because he got the other side rented out. He has it in a revocable trust. So he wants to know if there's any way to, like, what are some tips to avoid capital gains tax in the event that he sells? So the trust, the revocable trust, tell me what your thoughts are on that.
Yeah, so with the trust and being revocable, he's most likely going to be in a scenario. Obviously, there's some other different nuances to trust, but most likely he's going to be in a scenario where that is reported on his personal return anyway. And so he's not going to have any big trust tax bills separate from his personal tax bill. So that's going to be kind of wiping that out a little bit. Beyond that, if his taxes were done correctly in the past, then 50% of those expenses and 50% of that property should have been depreciated. You can either go by square footage or units. So if the square footage is more and he had a strategist involved, they may have said the rental property is more square footage. Let's do 60%, as expenses related to rental, and 40% is personal. So that really just depends on how that was set up. Long term, that 50% profit could be a 1031 exchange, like you mentioned earlier. Also, he could take that profit and then maybe just buy another property and do a cost segregation study on it.
You got me excited, and we didn't even prep on cost segregation, but I did a little research because I wasn't familiar with it. Do you want to talk about it at all? Because that was pretty darn cool.
Sure, yeah. So cost segregation studies are pretty amazing. What you can do there is you take your property, and instead of saying, I bought a rental property and I depreciated over 27 and a half years if it's residential, or 39 if it's commercial, you say, I bought walls and floors and paint and plumbing fixtures and on and on. So you separate all of those things out into their different categories. And then after you separate those out, you're able to then depreciate some of them at either faster periods, or currently there's bonus depreciation. So you can take 40% of that in the first year. So you have this $1 million property, maybe let's say 10% of it. So 100,000 was 5 year depreciable assets. And then you have 7 and 15 that can also be bonused out. So we have 100,000 at 5 year. And then we can take 40% of that in year one. So you get 40,000 deducted off of your taxable liability
That's
there. I'm
amazing.
sorry, not your taxable liability, your
Yeah.
taxable income.
Yeah.
So
No, exactly. Good distinction. No, and that's amazing. And for cost segregation study, do you have people you recommend for that? How do you do that?
I do. I actually only have one person I recommend for it. And I'll tell you the reason why. They defend their study however much it takes, however long it takes before the IRS. A lot of cost segregation specialists will have a limit on how many dollars they will spend or how much time they will spend defending their own work. And this guy and his company, they don't do that. They've only had one time that their segregation study has been challenged by the IRS. and the owner of the company wrote a letter back to the IRS, and the IRS responded and said, never mind.
I love that. Talk about a win. No,
So
and
that's
that's
why they are the only people I recommend.
yeah. No, in my world, people ask me if I know any good property managers, and my answer is yeah, I know property managers, but good ones are a whole different story. So no, having the right people for the right thing, I love that story.
Sure.
Yeah, the IRS knows not to mess with that guy.
Yeah. Yep.
All right, so we're getting kind of halfway through the show here. I know it's getting late over there. And we've got a QR code up here that Greg created. You guys can definitely scan that. We'll also put a link below the video so you guys can click on it. But you got some cool stuff there, Greg. Do you want to tell me about that if they scan the QR code?
Yeah, so we've got some tax hacks there, so they can just download. It's a PDF of tax hacks. Also, if you want to, there's a couple different links once you scan the code, and so you can select kind of what you want from there. So the tax hacks, I think it's the top 5 if I remember right, and then there's also so you got it there. Yep. So top
I
5
scanned it.
hacks. A
Yeah.
couple of assessments for just bookkeeping and tax ready, like just kind of a gauge of yourself, like where's your bookkeeping health, where's your tax readiness health, and then the third one is to book a discovery call with our team to learn more about what we offer and how it could potentially benefit you. So what we do in any of the discovery calls is we hear about your business, and then we tell you what we do, and then we really let people tell us if they feel like it's a good fit. We do kind of steer you to certain products or service packages if we think that's best for you. So we do have the gamut. We have a lot of people who are just starting out getting their first property, and it's more of like group type strategies and things like that. And then we have the one-on-one options as well for those who are maybe been going a little bit longer or need bookkeeping help, things like that. So
Yeah, that's what I love about it. It's the same thing with eviction attorneys, same thing with real estate. Like you got to have a one-on-one discussion to see what it is that makes sense. Sammer can't see the code, so Michelle can. I know you're in the background. Can you see if you can put it in the chat? And if you can't, Michelle is going to make sure that the link is there after the video is done, so you can click on that. For whatever reason, you can't see that. I think it's because it's small. Let me see if I can make you bigger for a second. Let's see. Oh, but it doesn't work because it's not showing the. There we go. There you go. Hopefully that helps. Okay, so people aren't able to see it, but we're definitely going to have that. We're going to have that on there, so don't worry. We'll make sure they get a chance to scan that. So, oh boy, it's like a roller coaster ride. We were talking about that earlier. So, what are some other? So, we don't talk politics at all on this channel, and we're not about to. We talk about basically how to color in the lines with what we're handed. So that's from a law standpoint and tax standpoint. What advice are you giving folks to prepare for any potential changes that you see coming, Greg? And are there any big changes you see? I know a lot of people will talk about, the 1031 exchange is going to go away. And to be honest, I think that's BS. I think that's just real estate brokers that want to encourage sales. But no, I want you, like, what in your world are you hearing about potential changes coming down the pike?
So a lot of these rules related to real estate go back to Congress, frankly. Like Congress is living in one state, then living in another, back and forth between their home state. And so they have these properties that then go up in value. They need to use them for business purposes sometimes. They need to rent them out as short-term rentals sometimes. So they're doing all these things. And so Congress makes the laws, technically, and mostly, I guess. And so they would be shooting themselves in the foot. And I tend to think that from what I've observed in my adult life and following kind of politics a little bit, no matter who is in office, they don't shoot themselves in the foot. So I really don't see those types of things going away. Another one that people talk about going away, and one of the reasons I love real estate, is the step up in cost basis. Mm-hmm. And I can explain that real quick in just a minute.
Yeah, please.
But
it's important.
people talk about that going away too. That would hose so many members of both political parties. And so I don't really see that. So the step up in cost basis basically says that when you pass away, if you have bought something for a certain price and the day you pass away, it's worth a lot more, your heirs then inherit that at what it's worth the day you pass away. So your cost basis was what you bought it for, but your heirs' cost basis is what it's worth the day that you pass away. So I give just an easy math example. Let's say you bought a property for $100,000 and it's worth $1,000,000 now. You sell that property the day before you die, you're paying taxes on 900,000 minus the depreciation expense as well. You're paying taxes on that too. So 900 plus is what you're paying it on. Your heirs sell it the day after you die. They get to say they bought it for $1,000,000 and sold it for $1,000,000. So there's no profit to claim there.
Yeah. That's a very important one, and that is one that not enough people know about, and it applies more than just real estate. It would be a stock portfolio
Stocks
as well,
value.
correct?
Mhm.
Yeah.
Yeah,
So
or even
that's
like a baseball card collection or cars or like
cards or
anything
things.
that has a basis that's for business.
No, and that's a great thing that, well, I mean, it's sad because somebody died. It's not great, but what not enough people know about that. And I'll talk to families that inherit real estate and they're not getting the appropriate guidance, and they're talking about, hey, we need to do a 1031 exchange. I'm like, no, you don't. You're basically, you sell it
Right.
within a soon enough time close to when your family passed away, and you're not going to owe any gains. And even it could be a year or two, and because it's factored after the cost of sale, you could still potentially have no capital
That's
gains
right.
tax.
Yeah, it would be minimal, right? Even if it's a
Yeah,
year or two later. So
yeah, no, that I appreciate you bringing that up. And again, basically in the frame of reference that that's most likely not going to go away because it's such an important thing to Congress. One that I would love to see change is the Section 121 exclusion amounts, which that's when you sell a piece of real estate, you get 250,000 single, 500,000 married, and that was set in 1997. And we
yeah,
haven't seen that change. That's one that I would see spurring the market on if we could get those limits increased to 500 and a million. And with the recent run up in values, that's highly relevant to a lot of folks right now too. So
that's right. Most of those things are adjusted for inflation, and for whatever reason, that one is not. So
yeah, same as 1997, which is crazy. I
mhm.
mean, I will say though, like in the home I grew up in, Ohio, small town, I think it's worth less today than it was in 1997, so it doesn't affect it. But out here in California, it's gone up like 4 or 5 times or more, which is crazy.
Yeah.
So, all right. So, if somebody is out there trying to hire a tax strategist, like, why should they pick you, Greg? What's so great about you?
Yeah, so the one of the big things that differentiates us from most tax strategists, a lot of them will just give a plan, and it's a really good plan with lots of like strategies that you could implement. But you pay them for the plan, and then they give it to you, and then they say goodbye. And so what we do is we provide that plan typically, honestly, in steps throughout the year, right? Because if I overwhelm you with 15 strategies to do, you might throw your hands up and do none of them. If you're lucky, you might do 2 or 3 and then get
That's
overwhelmed
smart.
and decide to. So that's why we meet with our clients every month. Everybody who signs up with us, it's monthly fees and monthly meetings, and it's either one-on-one or it's group, depending on what package they sign up for.
No, that's smart. I do the same thing with real estate. Going like when you're especially with both buyers and sellers, but especially a first time home buyer. Like if I told them everything that needed to happen before they get the keys to open the door, forget it. Nobody would buy.
That's right.
So you got to
Mhm.
do it strategically. And what would be a sign of a other than a tax strategist who hands over basically a plan and disappears on you? What are some other red flags? I'm not asking you to call out anybody in your industry, but I'm just trying to basically give folks an idea of what the red flags are. Because I know the red flags for real estate agents.
Sure, sure.
You know red flags in your in your expertise.
Yeah. So another thing I always tell people, and I'll give an example that is kind of backwards for me. I had somebody approach me and they said, "Hey, can you help me with strategy for a drop shipping Amazon store?"
Hmm.
And I said, "I can help you with basics, but beyond that, like I'm gonna miss stuff for you." And so if you're expecting the same strategist to work for all types of businesses, that's another thing that you want to watch out for. If they can always work with you no matter what, um, they'll do a good job potentially, and they'll save you some money. And there are some things that are universal, right? Like writing off your health insurance. Everybody can do that. Paying your kids. Everybody can do that if you have kids, and so there's some things like that, but the specifics, you really want somebody that's at least very familiar with your industry, if not in your industry in some form. So I always tell people basically, if it touches the house or is involved in the transacting of buying or selling, that's people that we work with. So
I love that. And that's same thing in real estate, same thing with attorneys. Like you need the expert. Like, because my area of expertise for real estate is particularly a seller who has a tenant occupied property. I know how to deal with that situation. And let me tell you, if a real estate agent does not understand that process, it's
that's
going to be a world of hurt with money and time. Those are both going to take forever and go up. So, and then what is, so being an expert, oh, I know what I was going to ask you. So, so CPAs are different from, like, what are the different levels? Because
sure.
that's one I've always wondered.
So there are CPAs, which are certified public accountants. That's typically a state license
Okay.
that you get. So, and different states have reciprocity with one another. Different states have different requirements of what you can get, and what you have to do in order to get your CPA license. Then there's what's called an enrolled agent, and that is a person that is credentialed with the IRS specifically to represent people before the IRS. And then the other person that I would put in that category is a tax strategist. There is no credentialing that is like nationally recognized for tax strategy. So it can be the Wild West a little bit. So it is definitely important to make sure that you have someone who is continuing with their education, continuing to learn. And that's another reason I think why it's important to stay in the niche that you are in. Both for the tax strategist as the company, and then also for the person that you're hiring to help you with strategy.
So All Nighter, I'm a big fan of All Nighter, and All Nighter is a big fan of us. He's finally here. He was on a Zoom. He says we
Okay.
can start now. By the way, All Nighter, we've been going for 45 minutes, and poor Greg is in Kentucky. He's in a whole different time zone. But EAs are where it's at, is what he says. I'm assuming that's enrolled agents.
It is, yeah. And honestly, we mostly hire enrolled agents for our tax prep. They can represent you before the IRS all nighter, so you are correct on that. However, at my company, we actually pay for $1 million audit protection. So if our returns are audited, we have CPAs and enrolled agents that represent you before the IRS on behalf of us. They defend our work. And so that's the way we do it, because we don't want to get into the actual defending people before the IRS portion of things. So we support our clients by making sure they have the documents they need for that audit. It's only happened once in 12 years, so I'm hopeful that we will stay, at minimal numbers on that. But as you grow, the chances obviously increase. But yeah, we mostly hire enrolled agents. So just hired another one this week, actually. So.
Yeah, that's it's like a blind squirrel finds a nut every once in a while type of thing.
Mhm.
That's so, and then a refresher too. You missed this all nighter. If you're going to do a cost segregation study, Greg's got the best person for it that basically the IRS won't screw with, so that's good. And then the other important thing is Greg will represent folks all throughout the country. He's like I said in the beginning, we're still missing somebody in Alaska or Hawaii, but maybe we will after seeing this.
Yeah.
They can do this. And so All Nighter, he has a channel as well, and he's involved with real estate investors. So he's going to share this. And definitely share Greg's info with him, All Nighter, because Greg knows his stuff when it comes to real estate.
Yeah, thanks very much. And in that regards, All Nighter, if you would want me to speak to your school as well, you can email me and I can help with that. So
Yeah, for sure. So let's wrap things up. We definitely, oh, see, he's excited about cost segregation. I knew he would be. I know him well. So let's wrap up. Again, thank you for doing this. I know it's a busy time of year, and you have come out late at night to answer our questions. I want to know, and let us know in the comments below if you found this helpful. We'll do this again. I'll bring Greg in to answer more questions. We touched on just the tip of the iceberg with strategy, right, Greg? There's a ton more that you could be sharing and people could be doing, correct?
That's right. Yeah, there are a lot of different strategies. I actually have a 5 to 6 presentation thing that I can do for different levels to help people kind of understand those different levels of where you are income wise. So
I love it. I love it. So make sure you guys look when we end the video. We're going to have a link so you can reach out to Greg. You can have that link so you can download the top 5 tax hacks. You can download some assessments and do those, and then book a discovery session with Greg's team. I highly recommend that. So thank you very much, Greg. Go get some rest, because tomorrow's another day where you're fighting dragons in the tax world, so to speak. So thanks for coming out. I really appreciate it.
absolutely. Thanks for having me.